Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some stocks on the move today in Europe. I'm Stephen Carroll with Lizzie Burton, and we're joined by Bloomberg reporter Chloe Mele for more. Chloe, good morning. Let's start with BNP Paribas then. Shares down 2.6% at the moment. Another item being added to Jean-Louis Bonnafé, the CEO's growing list of challenges, it seems.
Yeah, absolutely. Quite a tough morning for the CEO. So BNP said that its trading unit had suffered a hit from souring debt in the third quarter, which actually overshadowed what was otherwise really strong equities trading in that period. So loan loss provisions rose to 900 million euros, and that included 190 million at the global markets unit to account for a specific credit situation. So BNP actually didn't clarify what exactly, but the CFO suggested it wasn't linked to the collapse of Tricolor or First Brands in the US. This is obviously another setback for the company. Last week, the shares plunged because a court ruling had linked BNP to human rights abuses in Sudan 2 decades ago, and that opens the door to potentially billions in settlements for the bank. There's also the challenge of political instability in France and concerns about the health of the French economy. So all of that is also raising some worries about the impact on the domestic business, which the CEO is trying to revamp. So the stock, as a result of all of those challenges, is currently the worst performer of all the large European banks, and that is probably going to continue after this added setback for the CEO.
And speaking of the bank earnings and credit as well, the top red story for HSBC on the terminal at the moment is that it's reviewing its ties to hedge funds, with credit fears on the rise. But lots of different lines out of HSBC this morning, and the shares up. Yeah, the shares are actually up. It's quite an interesting story. So it actually raised its profitability outlook, which is probably why the shares are up. But that it was despite a fall in profit in the third quarter because of quite a big provision. So it had to set aside $1.1 billion to cover litigation by investors who lost money in the Madoff fraud case, which is dating back years and years now. But so it seems that despite quite a kind of a mixed bag, investors are really focusing on that raised outlook, and they continue to put their trust in the CEO, George Lederi, which has overseen kind of the biggest revamp in at least a decade, with thousands of job cuts, loads of senior executives leaving, and also a major bet on Hong Kong. So despite this rise in shares, some analysts are still noting some concerns, and analysts at RBC said that the bank is facing falling rates, muted loan growth, elevated impairments in the commercial real estate market, and the Madoff litigation. So that's quite a long list of headwinds, and that makes it difficult at the moment to see the wood from the trees, is what the analysts said. So shares are up, but there are some concerns underneath it all.
Okay, and to Novartis, shares down over 3% in Switzerland after their third quarter results. What's going on? Well,
it reported the slowest profit growth in almost 2 years for this quarter, and that's because some of its top sellers are facing growing generic competition over in the US, which is its key market, its biggest market. So that's going to be a major challenge for Novartis going forward. We're already starting to see this feed through into earnings. So as a result of that, Novartis is trying to find new treatments to mitigate that threat, both by developing its own, but then also through a big acquisition. So just a few days ago, it announced a deal that was worth $12 billion for Avidity Biosciences, which was the biggest deal in over a decade for the company, and that will give it access to potentially new blockbuster drugs. So that will provide some relief in the long term, but until then, the earnings will be reflecting that generic competition, and the CEO is actually expecting the full blow to hit in the fourth quarter. So we've not even seen the worst yet. So there'll probably be some weakness there until the wind turns, really.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.